Hello, Warriors. Day before Thanksgiving. Let's talk about what's going on here. Hi, Mike, Ingmar, Ryan, Kman, Bran, Steve. Hi, Blake. Will, how are you? Mike Green, how are you?
Hey,
Happy
Coach.
thanks.
Just before we get started, I just want to give thanks to all of our viewers, everybody listening in. It's because of you we can continue to do this, and this is our 10th year, right, Dale?
Yeah, I think yeah,
We're working on our going into our 10th year,
I'm
and,
starting to
and I
forget.
yeah, it's just, I just want to say, this is the time of year we really like to give thanks, obviously to you guys, and I want to give thanks to, you know, Ryan and yourself and Kman. You guys are here every single day, and I know just everybody here really appreciates you, that listens in, and I want you guys to know that you're very much appreciated by me and really the trading community at large. So thank you all for just being part of what we do every day. And I just wanted to get that out because I'm afraid that I might forget it at the very end when all this shit's going down. We got news
Yeah.
happening, and I just want to say thanks to everybody here. So,
All
all
right.
right, I'll shut
So,
up now.
no. Anyway, I think the whole team feels that way about our community and our teammates, and to be grateful for us. 1 plus 1 equals 11. That's the math that we use here. Yeah, it's great to hear people really being grateful this time of year. So I wonder if Ryan is grateful for the budget in the UK. And
He's so
and
grateful for Rachel Reeves. So grateful.
and that looks like cable's trying to do something. Look where it held after the budget announcement. So, what do you do with cable now that we have that big thing out of the way, Ryan?
Well, we're still in the midst of it,
Oh,
but yeah,
okay.
I'm glad I'm bald because it means I can't pull my hair out.
Uh,
It's been a real crap show. We have this department who does all the fiscal numbers and measuring. They released the report early, so
yeah,
basically they released the budget early, and so
yeah,
that's all kicked off. So we had all the measures. Yeah, overall early doors, but on the fiscal side of it, the stability side of it, that's looking positive in terms of numbers. That's why we saw a little bit of a rally in gilts and the pound having a little spike and recovering up at the moment. She's doshing out all the little measures and tax hikes and all that stuff. So the market's going to judge that, what it means for the economy moving forward. Is it going to be good or bad for growth? So I think the initial market reaction, we're going to maybe see a bit of positivity in the quid. Whether it's huge, I don't know. Cable,
yeah,
we bounced off of 132.20-ish
yeah.
yesterday. That's been the high previously. That's going to be a marker for whether the market likes this or not. And if we're up through there, we're probably going to be moving to 133s not too long after.
It's interesting you bring up 33 because we're on the verge of a death cross here,
Yep.
right? So that's when the 50 is underneath the 200. That hasn't happened, gosh, since all the way back here. Really hasn't happened in a long time. So that's something to pay attention to. I'm not a big proponent of you get a golden cross or a death cross, and that's your timing for getting into a trade. But it kind of has implications for a little bit more intermediate term. So
It's confluence, isn't it? It's confluence of
yeah,
the two
yeah,
MAs. So it
yeah.
is important on that basis.
Okay, and euro, it's trying. Considering all the relief rallies that we had this week, especially, in S&Ps, and we had a nice relief rally in metals. Maybe
Yeah.
it's not a relief rally. Uh, Silver's acting, pretty good. So they cleaned out the shorts here. So I don't know, are we going to new highs? There going to be another failure setting up here. I don't know. It's not my highest conviction trade.
Yeah.
What is though, what I'm trying is this 6,800 level in the S&Ps. I think Blake will probably confirm. I think it's maybe around 61.8 back. But you know, if you were worried down here,
Slightly
only
above, but yes. Slightly above, but yes.
okay. So if you're worried down here and said, "Boy, I wish I'd raised some cash," here you go. Because I mean, everyone probably thinks it's a layup for new highs at 920 with the Fed's going to ease and we're going to sell, NVIDIA's going to sell their best chips to China and, everything's okay again. Santa Claus rally that started in Thanksgiving. So I think this is an important level. And, just wanted to point that out. Uh, Ryan, anything in Aussie that has your attention? It's really the strength today.
Yeah, well, I'm looking at Aussie Kiwi because obviously you had that CPI data out, which was pretty strong in Australia, and then we had the RBNZ
Yeah.
cutting, but pretty much saying they're on the sidelines now. They're going into neutral, so that's removed that component from this pair. It's dipped. We're just holding those prior lows that we got early in November
Yeah.
on the bounce. So I've had a little short, only a 20, 25 pip stop on it
Okay.
here, just because it's holding the break. And if it continues to do so, that might lead to some further downside. But if we're back above this 114, 50, 60 area, then we're going back in that range. Maybe then going to have a look at the highs. But it's I think it's going to be harder work to get back to those 116 highs now the RBNZ's out the picture, or mostly out the picture.
Still constructive and long Canada with this going on, or are we
Yeah,
set up? Yeah.
I think I said on the flow show, on the F.A.C.E show the other day, it needed to get through that high, that 25-30 area, 41, 25, 30 area.
Yeah, it never took out the stops here. That's
No,
what I thought it might do, but
it
no.
couldn't take out that 25-30 level, and I thought it might be
Yeah.
on the clock that if it doesn't do it, we'll see a bit of a pullback. Staying below 141, 141.90, 85.90, sorry, 140, 85.90 isn't a good look.
Okay.
It might mean we're going back into that malaise that we had down to the 139, 70, 80 area.
Okay. That'd be a big trade from here, and that would probably be Dixie. Should take out 99.40 if that happens. So if that happens, we take out 940. It takes you into the 98 handle range. Dollar not looking great. And I was looking at this yesterday, guys. It looks like a bear flag to me. I mean, straight line move, ABC. MEX still looks ugly. You guys doing anything with MEX?
I'm
The whole
not.
team.
Again, 1850, couldn't get through it, couldn't break, and
Yeah.
couldn't hold above it.
Look at
Again,
that black line, guys. Draw it on
yeah,
your chart.
yeah,
1850. Big pivot.
massive,
So,
massive.
okay. So, I don't know if there's anything on the trade front or anything, but it's one of the weaker ones. Okay. And Swiss, you guys still trading Euro Swiss? Let me move on to Kman. I know you don't
Morning, Dale.
celebrate. I know you don't celebrate it, Ryan, but on Thanksgiving, I'm grateful our paths crossed. And
Me too, mate. Me too.
okay, so thank you, buddy. So Kay, you doing anything with maybe yen crosses, or you caught this Euro Swiss?
I'm still long Euro Swiss, which is really funny because somebody logged on to our I think it's Dale Briscoe also logged on with my link on on Face because some links seem to have disappeared or so, I don't know, but that's really funny.
Oh,
It's not me, guys, who's logging on twice. But anyway, yes, I'm still long Euro Swiss. Euro yen, I didn't trade it, but looks still constructive for as long as we are above 179.75, 180. Yeah, that Euro Swiss. I'll see where we end up this month, or even starting December maybe. For the time being, for as long as we're above 92, 90, 93, Euro Swiss looking good. I'm just trading, but it's more scalping than really having a medium term position. Back long the metals, gold in particular. And yeah, silver is flying. Huh? We're back at that 52.5. It's
Yeah.
defying the laws of gravity.
Yeah. And if we do get a dollar break, right? Shouldn't
Uh,
hurt, it shouldn't hurt
be-
it.
could be, but silver went much earlier, right? I mean, or much faster, I would say. I think there's something else that's going on, maybe on the yields also front. I don't know, but it's not looking bearish at all, that silver. And you were talking about the mix. I mean, this silver is a bit like the mix. You got that 1850 53 symmetry in dollar mix. When it's above, it goes up to 3%. When it's below, we risk going down to 3%. And silver is doing the same around 50. And if it's below, there's a chance to see 47.5 or 45, but now we're above. I'm thinking we may be on our way back to the prior all-time highs, you know.
Okay. Could be.
And for the rest, yeah.
This is important for the mix. Okay. So keep an
Yeah.
eye on the gold silver ratio
Mhm.
because we've had one higher low. Actually, you could go back to here, but on this pullback,
Mm,
this could be the second higher low if they could turn it. So
okay.
just keep an eye on that.
Yeah.
And what were you saying before I interrupted you?
Yeah, the interesting thing, just coming back on the Kiwi and the Aussie, because they both had some important, well, on the Aussie side, data, and the Kiwi, the RBNZ. Both of them ran into resistance where they had to, and the Aussie is going. I have like a pretty interesting level at 65, 20, 30. So if that would go, I think we're going to push higher, but we need the confirmation of it really going. And the Kiwi is 56.9505, and we stopped banging to that zone as well, and that is going to have to break. So on both, I would say they rallied, but they have not broken important levels yet, and that's kind of what I'm looking at, because on couple of occasions we had already these kind of moves where either or both of them rallied, but then a few hours or a day after the announcements or the data, the move kind of fizzled away. So I'd still wait for confirmation for breaks before jumping on either one of them again.
Anything with China?
I sold it again
Okay.
yesterday evening, and
Nice.
very late my evening. Yeah, after the open, after the reopen, between well, our time, 10 o'clock is like the turn of the day, and I saw it didn't want to go anywhere anymore. So I sold a couple of it again around, what is it, 708 and a quarter, just because we were
Yeah.
breaking the prior lows and there was absolutely no bounce.
Well, we
Uh,
have to be happy about that. Maybe it talks about warming relations between China.
Nah,
Talking
don't
about
know.
no?
Yeah, I don't know, or China dominating. Maybe it's rather that than warmer relationships.
Okay. Yeah.
But yeah, the other interesting thing, and I forgot to mention it on the flow show, but we can't mention everything, is apparently Volkswagen, VW is
Yeah.
is is wanting to up their production again, and especially for EVs in China. So, and that's what we've been seeing for the past weeks, if not couple of months, is that people are slowly getting back into China. I don't think that geopolitically speaking, it's warranted, but from a business perspective, the people don't seem to be too China averse right now.
Well, when you lose a friend or a friend is, betraying you, you start looking around. And I think
Mm,
that's what's happened with this trade war with our European friends, that they may look to China because
mm,
of how difficult it is to work things out with the US,
yeah.
right?
Yeah, that's true. But then, okay, I still I don't know how it's going to go on the long term because of that we spoke this morning, is that the geopolitical tensions are actually ramping up and instead of cooling down.
No.
This Taiwan thing, Japan thing. If it's a deal that Wickoff and Putin put together for Ukraine, it's going to be a Russian victory, and that acts is geopolitical wise is still not looking good to me.
Well, I heard the Europeans, when they heard about the US is going to sell advanced chips to China,
Mm,
and the reason we weren't were national security reasons,
mm,
that they're thinking, well, the US is going to do it, what should hold us back?
yeah.
You know,
Yeah, because there's this big Dutch chip maker, is it? Which has been allowed again to sell chips, I think. Yeah. Mm.
all right, let's turn it over to Blake. I'm going to give you the charts and after some of our wishy-washy comments today, you'll be refreshing. Anyway, uh,
It's okay to be wishy-washy. I mean,
yeah, I
days,
mean,
days
yeah,
like today are
the
like kind of
holiday.
challenging, right?
Yeah, you don't have to do something every day.
No, no, no.
There's no
It's a
law, Go ahead.
No, and today is the day before Thanksgiving. Well, no, we got a lot of stuff coming out today. But the liquidity is going to start to thin out in a little bit. I'm just more interested to watch Ryan grab some tweezers and pluck out what little hair he has on top of his head, as he's getting through this budget. I think that'd be a great meme that we could get there, Ryan. If you want to film that.
I polished it. I polished it before I started this morning, so I couldn't do that.
Oh, okay, all right. Well, hey, let's talk about a few things that we've got going on now. I want to talk about Bitcoin because it is trading so heavy. I mean, it is so heavy. It still just is really weak. And I just made mention of it on Twitter. Uh, Tor, what's his name? Crap. Torsten Slock of Apollo Group. He just mentioned in his daily thing about Bitcoin diverging away from Nvidia Nasdaq 100, and also we've been talking about it as far as just leading us lower in risk assets. It was really what led us to believe that the equity markets were going to break down last week or at least test support, which we did. It's still very heavy. It led me to believe that the Aussie was going to trade below its 200 DMA, which it did. And if you look at Bitcoin right now, it is just trading again really heavy. And if you're out there buying equities right now, and you realize that, as Dale pointed out, we're around the 618. We actually are a little bit higher right now than the 618 retracement of oh, here it is, of the entire move lower. You can see we're slightly above it, probably enough just to squeeze out all the shorts. Yet everybody rushing to the doors yesterday, closing out
Yeah.
shorts, covering up their VIX calls, getting out of those. You got a lot of people just getting squeezed out. And now that we've kind of broke that 618, broke some of the horizontal resistance, you look at Bitcoin, it looks so heavy. If that thing starts trading lower, that's gonna, probably caught a lot of people off guard. Probably catch a lot of people on the long side, buying up everything, getting squeezed out ahead of the
You
weekend,
know
the
what's
long
really
weekend.
telling, Blake, on this?
Yeah.
You're talking about how we took out, that was the NVIDIA earnings day, the highs that we just took out. And so the market has taken them out, But look at Nvidia. You know, it's barely rallying. So you know,
Yeah, Nvidia is in breakdown territory.
yeah,
Yeah.
it broke down and it hasn't negated it yet. And the overall market, I don't know what's leading it now. Mags have
It's
been,
it's, it's
anyway, there
Google.
you go.
It's
Google,
Google.
the answer. Yeah,
Yeah.
Yeah, it's a
Google.
rebalancing from Nvidia into Google.
Yeah, I mean
Yeah,
it's rotation, right? That's exactly what Kman's saying.
yeah.
But it has been a leader and it's very widely held and it's definitely something we should be paying attention to.
It's 7% of the S&P.
Yeah,
The rest.
maybe now it's like 6.8%,
Oh yeah, could
you
be.
know.
Yeah, yeah.
Yeah, it's probably a little bit less, but still, regardless, it's something, that we should be paying really, really close attention to. I agree with that. I asked you guys in the chat room this question, and I got an answer from James, who's uh, you know, he's obviously a trader on a bank desk, and he has Bloomberg access and all that stuff. He's in our chat room, but I was asking, hey, should we be selling euro sterling right now on a little false breakout at this point in time, because you could see yields. You got UK yields are leading us lower. So what do you guys think here? I mean, should we be selling euro sterling?
You could do, yeah. Obviously, it's going to be a bit of a slow mover.
I don't care about
Just,
that. I just want to make money.
I would say keep an eye on these gilt yields. If you're going to be trading the pound now, keep an eye on those gilt yields.
Yeah.
Because they're moving down and they're going to give you an indication. We had a couple of gaps in play when she cancelled the income tax rise. And 10 years, I think, have filled it. The short end's filled it, but the longer end hasn't filled it yet. But it's not about trading the gaps. It's about how the market is now viewing the budget over that. So if we get back down to those pre-gap levels, then the market is looking more positive, and we could be seeing the pound rising. I'm still waiting on euro sterling. If it gets down to 87, 87.20, I might have a look at it down there. I've just this second bought a bit of cable at when I get in at 12, 132.12, because I think we might be on for a bit of a run. If those
Oh,
yield
you're
curves
buying
continue.
sterling. Okay, all right.
Yeah.
Hey, just for Chris, reach over. It's on the other side of your keyboard. You probably have a speaker. Just turn the volume button up just a little bit. Just all you have to do is twist it, and your sound should be better once you do that. All right, there you go. So you should be good. All right.
Do you remember when you had to get up to change the channel on TV, or are you too young?
Screw that. I ain't doing that. I ain't getting up.
We used to have to.
I'm not doing it. No,
I
you
have
guys
to
do it for me. And feed me some grapes too. And where's my
All right.
fanning?
Yeah.
All right.
Oh,
All right. So
all right. You are a
we've got
great
data
guy.
coming out in just a few minutes. And we're gonna cover that. But let me go run over to Kman. Kman, what are you thinking right now as far as data goes, as far as what you want to do? Anything that you're seeing this morning that you want to trade? You get long sterling?
First of all, no, I'm actually. I reduced it on that spike in euro sterling. I have virtually nothing in it anymore. But gilts are moving higher. I think the market finally coming to grips with potentially that better headroom that Reeves has on the fiscal front. Euro sterling it's here, right? 50.65. If that goes, then we're probably going to see a little bit of a run lower, because that was the break level, break zone to the top. What I'm looking at going into the rest of your day is later on today, if I'm not mistaken. Let me just quickly check that. We do have the beige book out. If it's out, obviously, I think it will be out.
Yeah,
And
that is correct.
Yeah, and that is something that Fed member, who is a voter, I think, right now, I think so, Jefferson is looking at to make his next decision for a rate move. He's supposed to follow the cut move in 2 weeks, small 2 weeks time, but he told us that he will be watching the beige book. So it could be that on the beige book later today we see a bit of a dollar move on the back of it, because he may he may be in the balance to make it a 7.5 or whatever cut in December. So that's going to be an interesting one, which I'm going to be looking at.
So let me ask you this, Kay and Ryan, have you guys heard anything about end of month flows? I mean, we got corporate month end that's been kind of making their way through the markets today, and then we obviously have lack of liquidity the next couple of days. So any thoughts here?
Okay, I mean the overall sentiment or the overall expectations were for a bit of dollar buying, but the problem is that in the last session and a half, S&P has rallied completely back to where we left it. So I think there may be very little to do on actual month-end flows. That's what I'm thinking. Unless there's been front running, and then we may see the other side. But I'm not going to.
No one front runs anything.
Yeah, well,
that's a bunch of bullshit. That never happens in the markets.
Everybody front runs everything, right?
Yes.
But yeah, that leaves us with maybe a bit of corporate interest today. But I'm not picking a side for the month-end flows this month.
Okay, thank you very much, Ryan. You have any thoughts on that?
What's the question? Sorry, mate. What was the question? I'm just
okay. Very good. All right,
screen.
we'll move along. It's okay. Just kidding, buddy. Hey, a couple other things I want to point out. Here's the dollar index, right? And the dollar index, just for reference, we're trading right at the 200 DMA. We're nearing channel support, excuse me, and this is the 23% or 24% retracement, I like to call it, of this move. And if you go from the very bottom here, we have barely even retraced a little bit in the dollar index. Yes, it's pulled back the last couple of days, but I wouldn't write off the dollar just yet. Obviously, the data that we've seen the last couple of days yields have come down. People have started to price in that we are going to get a rate cut come December, right? So that's the market's saying, oh yeah, we're definitely going to get a rate cut this next month. We got an 80% chance, as you guys can see here on ForexAnalytix. You realize that the next hike is, or excuse me, next cut, 80% chance thereabouts. So now you're starting to see the dollar suffer as a result the last couple of days, but I wouldn't write off the dollar just yet. It's just worth noting. Now we have a couple of minutes before the data comes out. We have weekly unemployment claims. I guess we're going to get that today. We're also going to get durable goods. Like I said, we have about 2 minutes. So what I'm going to do is I'm going to go back over to ForexAnalytix, pull up the data flash. So this way you'll be able to see the data as it's being released. Jobless claims, continuous claims, durable goods orders. You can see right here. Let me pull that over. Then we're going to go over to the 3 panels. We have yields to the left, which are obviously under a little bit of pressure. Dollar right to the right, and then you have the S&P right in the middle. Again, as Dale pointed out, we're real close to the 618. Dale, any last minute thoughts before this data comes out?
No.
You asked me about the dollar MEX, and I'll tell you what, I have established a position in the dollar MEX actually just before you asked that question. And if you guys are curious about what I'm doing with the dollar MEX, you can actually go to the trades room in the Forex Analytics community, and you'll see it posted right there. Happened about, I don't know, 18 minutes ago, maybe just before you were talking about it, Dale. Just before. Yeah. So,
all right, buddy.
Yeah. All right. So, Ryan, any last minute thoughts here? You got one more minute to praise Rachel Reeves.
Don't tempt me. I'll take half hour slagging her off, the clown. No, just I'd keep an eye more so on this jobless claims data than the other stuff, because it's a bit old and stale, but it's fresh numbers. So yeah, we'll see if there's any wobbles coming in this US data. But for the quid, yeah, if cable breaks this 132.20s area, then I think it's going to push higher. Euro
Stop
sterling
talking
will
your
be
book.
heading lower.
Stop talking.
No,
your
Euro sterling will be heading lower, which I'm long, so that goes against me.
Oh,
so,
okay.
Yeah, it's. And then we look at what this means for the economy as a whole moving forward. So trade today, now, and then trade the rest of the economy later.
Got it. All right.
Is this
Kman,
current data? Current data we're getting today?
Yeah, it should be. I mean, the weekly jobless claim should be, and the
Okay.
durable
Yeah.
goods. I'm not
It's
sure.
September. Durable goods is
September.
September, so it's playing catch up.
All right, here we go. Durable goods
Durable
better than
goods,
expected.
yeah, pretty better than expected. Jobless claims better, 216,000, though that continued claims is still ticking around 1.96 million.
But here's where expectations shift again. Then you get everybody going, "Holy shit, maybe the Fed's not going to raise or not going to cut rates." Oh, and then
yeah.
the dollar comes bouncing back. Who
It's been
knows?
the biggest question mark in this whole picture. We've had NFPs up, down, all around, but this jobless claims is just staying where it is.
Yeah, I
Very,
mean,
very
look,
strange.
we don't have a lot of immigration. There's the employers are not, letting go in mass of people.
Yeah.
So it's not as bad of a picture as everybody hopes it's going to be. Or, all the, if you watch, on YouTube, I call, you have Twitter as FinTwit, YouTube is, FinTube. And if you watch all the doom and gloom over the last year and a half, you've missed it all. You've missed it all, and people continue to believe that, death and destruction is right around the corner, but I don't know. The data doesn't really suggest that. I mean,
I don't know that those
slowing down.
aliens should be here pretty soon.
Yeah, we have
From that.
what was it called? The A3 comment, AI comment, whatever
Yeah.
the hell that thing's called. That's
Yeah.
coming. That's coming,
Yeah.
and we're all screwed when that. You better hope you got some guns at home, because
I have a ray
aliens get
gun.
here. Yeah, have
A
you
ray gun.
ever seen the movie A Quiet Place? That shit's
No.
happening. Go, you
Oh.
should see it. That's happening, folks. Sorry. That's
I
next
would be
month,
too,
actually.
I'd be too scared.
All right.
Anyway.
Well, hey, again, I'm going to reiterate. I know you have your guest is here. I want to say, guys and gals, it's 10 years. And for a lot of you that are in this community, you guys have listened to The Morning Edge for like 20 years with me. And I just want to, take this moment to say thank you all for listening in and being a part of our community. For all the traders in the chat room, you guys are right now, you guys are all in on we like to call it Jumbotron. I want to thank you all for making our community possible. We talk all day long, every day. I spend probably more time with people here in the chat room than I do with my own family. And so even with my kid home from college from Ole Miss right now, I'm still spending more time with you guys. So you guys are family. Thank you so much, and really appreciate each and every one of you that have been part of this for the last 10, and for some of you with me for the last 20 years. So thank you all. Really appreciate you. And
Happy Thanksgiving.
Dale,
thanks,
Ryan,
Blake.
Kman, you guys are the best. Really.
Happy Thanksgiving, Blake.
Happy
Enjoy.
Thanksgiving to you, sir.
And Ryan, thank you. K-Man, thank you. Probably see you Friday.
Thank you,
Yeah,
Coach.
have a great Thanksgiving, Dale. Don't eat too
Thank
much
you.
turkey and pie.
Thanks, Ryan. L-tryptophan. I'll be taking lots of naps. So
Me too, man. Trying to watch some football and sleeping and drinking a couple of
dozing.
beers.
Oh, the game's over? What happened?
That I'll
Is it
say that a
phone
few
you all
times,
up
I'm
in the
sure.
afternoon?
Yeah.
Gonna phone you up in the afternoon, wake you all up.
All right, guys. Enjoy. Hey, Daniel, how are you? Welcome back. Happy
Dale, how you doing?
Good. Happy Thanksgiving to you, buddy.
Good. Happy Thanksgiving to you too. Yeah, I can't believe it's another holiday week we have in these markets, and a holiday week, the first we've had in a long time after a big data blackout from the government, right? We were talking, you guys were talking through some of those numbers that came out this morning, and we're just starting to get like a view into what a lot of those statistics are, and that's true everywhere you look, whether it's commitment of traders with in the U.S. futures or our jobs reports and data. We're just getting caught up with where the last several months of these government numbers have been, and markets are, oh boy, they're keen to price that in, aren't they?
Yeah, pretty wild stuff. I'm wondering what has your attention going into the end of the year. Could it, grains have had decent performance?
They have.
We talked about that 3 months ago before it happened.
We did, and I think I'll share my screens here, folks. I think one of the big things, and we can jump into that agricultural side. So for those that
Okay.
don't know me, I'm a commodities and futures broker with Zaner Ag Hedge or Zaner Financial Services. We help commodity producers and from energy to metals and agriculture help hedge their production. We also help on the speculative side, retail investors, right, get involved in futures as well. So always reach out to me, if you have questions about futures, what have you. I specialize in agriculture. One of the big things we've been following recently is not only this, I don't want to call it depression, but it's been a lack of demand in row crop prices. We'll look at that in a second. But the big story of the last several months has been the cattle markets. Everybody has seen how beef prices have hit headlines. It's become a political story. We're talking about, at one point, people were talking about shipping animals in from South America on boats, which, by the way, is not economically feasible. The way we take care of the cattle supply issue, which, let's backstory here. Going back to the 1950s, folks, we have the smallest cattle herds in the United States since the 1950s. So this whole idea that cows and cattle are creating global warming is kind of crazy when you consider the size and the number of animals that we have on this continent is the smallest it's been in the history of the world. And I say that because our cattle herds today don't actually paramount to the natural herds of bison and things that roamed across the plains. So it's funny to talk about that we have the smallest number of bovine animals on this continent in hundreds, if not thousands of years. And that's a big reason you're seeing cattle prices do what they're doing. So let me get that chart up there and we can take a look at how
are they
that might
trying
be
to
unwinding.
expand? Are they trying to expand their herds?
Yeah, and that's actually, Dale, the exact right answer to the question, right? Is if you've got this issue, and I've got a 4-hour chart up here, but let's look at the weekly chart of feeder cattle, which for those that are unaware, feeder cattle are the midweight animals that are purchased that are then put, quote unquote, on feed to then become a fat cattle or a live cattle. And that is the finished product that is then butchered and sold to market. And this massive run up we've had in price since basically the COVID lockdowns to our highs here has been a result of effectively no slowdown in demand for meat, but just an ever shrinking herd. And over the last year, when we shut down the border with Mexico, which is where we get a lot of our animals from, physical animals that walk across the border legally and sold to market, are a way that we help, meet those supplies in demand. The problem is we had the screwworm epidemic here over this period, which has kept that border closed and kept those animals from coming into the country. So we've had this tightening, diminishing supply in the herd that there's no good way, folks, to, spin up cattle, right? They take they're just like humans. They take almost a year of gestation, to breed out another animal. You only get one at a time from each birthing cow, and quite frankly, right, you just can't make meat, right? It just doesn't happen. We've tried it. People don't want it. They want the fake stuff. So at the end of the day, this to me represented on a bigger picture, folks, gold and cattle represented to me the last hurrah for the inflation trade that we've seen over the last 5 years. It began in row crops during in my opinion, back in the 2000s, actually leading into it. You can look at a chart. If we look at a continuous chart here of soybeans, a great example of where inflation began way back in the pre-2000 era, where we had a similar situation in beans, kind of the opposite of what we have in cattle. We had an oversupplied situation where our one big buyer, China, wasn't participating as much as we'd like. In other words, China buys like 80-90% of the global production of soybeans. That includes our production. So if China's not buying soybeans, prices are down. And we'll cover how there was a trade around that China news and the China trade deal that is soybeans are the most direct proponent of. But back in 2018 through 19, Trump trade war 1.0, if everybody remembers, soybeans were at the forefront of one of those things that China wasn't buying. All of a sudden, we got a trade deal around. We were coming out of the COVID epidemic, and the world looked okay. Soybean prices went to the moon, literally doubled in price in just two crop seasons. That's a massive move for a product that only one buyer in the world really consumes, China. So this is where inflation, in my humble opinion, began coming out of COVID, was in our row crops. It then rippled into oil during, right, the Russian and Ukrainian crisis. Other markets like our stock markets were continuous beneficiaries of. And then finally, cattle and gold and silver in our precious metals got that last big round of it here coming into 2025. And I think that that's been that last hurrah for the inflation trade. And isn't it interesting that it's all right alongside maybe a turn in the Fed speak, right? Going back to a time of, quantitative tightening, or out of a period of tightening and into easing that we're starting to see in the markets.
Okay, so are you implying that you think gold is done?
Yeah, that's the $1 million question, right? I don't know if it's done per se, but I do think we're closer to a top than a bottom. That's easier said than done. But if we look back on this continuous chart, weekly gold, we can see some pretty consolidative price action. Each one of these candles is 1 week. The lines you have at highs and lows is just the highs and lows for the month. So you can look at the monthly and the weekly here all kind of at once. You see this very inside consolidated price action. We're inside on the weeklies and in the monthlies. And if you go down to the daily chart, you can see that we're still inside this range, although in a little bit of an uptrend, right? This looks like a triangle to me, right? If anything, this looks like a bull flag pattern to start. That doesn't mean it needs to continue higher, because, hey, I can go back and show you instances in gold where we had, bull flags that resulted in, were the start of downtrends too. But when we look back on gold on this daily and weekly chart, this type of consolidation we have at highs so far doesn't scream market top just yet. It certainly suggests there's resistance, and we've run into a reason that there's been some profit taking, I think. But fundamentally, what has changed, right? What drove gold prices higher? Has any of that changed? Our government hasn't been able to resolve debt issues. We still have ballooning deficits. We still have government shutdowns living our heads. So all of these kind of negative things that, in my opinion, are a reason why people are finding gold as a safe haven, and gold is getting its time in the sun finally. None of that's really changed yet. So we see a technical pattern of continuation alongside a fundamental. It's still a fundamental shift. I think gold has more upside, but I do think that we've gone parabolic. Silver's gotten its move, which is oftentimes a final precursor to that type of situation as well. And once silver starts to top out, I think it is, that is to me another sign for this precious metals rally, because it was the last to go. So it is to me, the final hurrah that still on a weekly chart is putting higher highs and higher lows. Still looks like it wants to go higher, but I do think we're starting to run out of steam, and we're going to be finding a top sooner rather than later.
I saw a video on what's happening, the tragic state of farming in Arkansas. And I'm sure that's not the only state, but they said in the video, well, one of the farmers interviewed said that they lost 25% of people that have been generational farmers last year, and on the verge of another 30% or more this year, because of the consolidation of seed companies and fertilizer companies, and they have to take whatever they'll give them for the crops, the input prices. Do you think it's going to be a good time in the next 12 months to go out and buy some farmland that's distressed because of what has happened to the ag industry?
I do. Unfortunately, like, I hate to say, that type of thing. I think
Well,
the
that's like,
combination
this is my
right.
imitation of the late great Sam Zell, who was his nickname was Grave Dancer.
Yeah, and I think that's exactly what you're seeing, right? You've got really three major choices in this country to plant. You've got either corn, wheat, or beans. Here's a chart of soybeans. We're coming out of a period where we ran up in prices up to $18, like I talked about, but then we've otherwise ran into issues with trade deals with China and have come all the way back down and unwound back to almost COVID prices. This is your inflation deflation trade 101, right? You start off at a low price. market inflates and it doesn't quite reach that old low price when it finally pulls back. But that's the nature of row crops in general. The problem is that if you look at a chart of corn, and now here, or wheat, or I'm sorry, soybeans, here's a chart of corn. You can see a very similar, situation of that we are coming off of much better prices a few years ago, which means, cash flows being what they were, a lot better, have now dried up because we're selling a crop at lower prices. And it doesn't matter if it's corn, beans, or wheat here. And I'm showing you all three of those charts.
To give
you an idea of how times were 50% in terms of price better, right? Just a year ago than where we are now. So you've got a lower price point to sell your end production. You've got interest rates, which are still at their highs, and you've got really, really high input costs that haven't come down. That's the other issue with a lot of these things, is that many of these headline, commodities, their input costs haven't resided much. So how far down can the price come when the input costs are, and you're producing something at a loss, which right now, corn below 420, beans below $11, and wheat below probably 550, all represent crops at virtual losses on paper. So we unfortunately also have now farmers that are waiting around for government subsidy into the end of this year because prices are what they are.
You know what I heard about those subsidy checks? They don't go to the farmer.
Usually not.
They go to the creditors.
The creditors, the service tech that's fixing up your equipment, right? That's exactly right. That will free up, some cash flow for farmers, but you're absolutely right. It doesn't go into their piggy bank. That's money that goes right into their operational costs, whether that's at the bank for their financing or that's absolutely right, or fixing a piece of equipment or whatever. And that's true of anywhere you look in commodity space, right?
So
commodities aren't free to produce.
Yeah, so I mean, we're losing all these farmers. Besides the big conglomerates, Archer Daniels and a few others, who's going to be,
which, by the way, have had tough quarters
growing
as
our
well.
food? Who's going to be growing
AEM
our
actually
food?
laid off, I think I saw 3,000 jobs this last quarter. So those commodity firms are also hurting their bottom lines with prices where they are. They're laying off jobs and closing plants. We heard of I believe it was a meat packing facility. Oh, where was it? I think Shuttered just closed its doors too. Now that could be for upgrading and what have you, but this is something that's happening across U.S. agriculture, and it is scary because there's one thing that a country can't afford to do. It's unable to, feed its population. We're a unique country, the United States. We are completely food self-sufficient, fruit and fresh water, and technically energy self-sufficient. There aren't really any other countries in the world that can claim that in totality. And that's not something that we can, we can afford to sacrifice.
Okay. A lot of the markets, I believe it's all one market, that they all go up together, different degrees. They all go down together, different degrees. And I think the dollar is a linchpin. Do you have a view on Dixie here?
Perfect segue into the dollar. I do have a view here. Going back on a dollar chart, this is now going a continuous chart on that Dixie, going back to the 1990s, so that folks, if you haven't seen this, before, look at how range bound. Like when we talk about the dollar, I like to joke that, well, we've been here before, because you go back far enough, and we really have. Currencies just chop around. It's a race to the bottom. I think we can have a whole nother discussion about how fiat system is designed, to create inflation effectively. And that means that you're going to eventually devalue every fiat currency relative to a basket of goods. All that being said, the Dixie relative to the other basket of currencies in the world seems to be locked in this multi-year kind of stair-stepping trend higher, or was. My big question was, back in 2020 or start of 2025, when we broke back below that $100 mark, did we break that uptrend altogether? And this is, a long, or are we still holding, that? To me, we kind of broke the series of stair stepping higher, right? 2 steps forward, 1 step back, 2 steps forward, 1 step back. Okay, it's 3 waves back into a trend line support, but I didn't love that we broke below 100 and broke back down into this old range. And this is, again, a chart going back 20 years on the Dixie. So that's, the bigger picture. Diving a little bit closer here, it looks like a clear 3 waves down, right? for all intents and purposes, now the market has rebounded in a pretty constructive structure. Maybe, you know, Elliott waivers could call this nesting. You could call this an expanding leading diagonal. More importantly, I see us getting back above that 18-day, the 55-day, the 100-day, and now the 200-day moving average. I think that's the important thing to talk about. What the dollar's done since September is that we've had an uptrend in the dollar on the daily chart that has broken above a lot of major technical indicators.
Where are those moving averages coming in that were above now? 98-ish? No, the moving averages.
Which
the
one?
Moving average underneath.
Yeah,
The
so
green
the 18-day
and the
here is
green
red.
and the blue. Yeah.
The green and the blue are the 55 and the 100-day. They're at 98.57 and 98.33. 55 the green, and the 100-day the blue there. So coming in at about a 50% retracement if you look, you know, from this low to high. So, you know, you've done all this work. The dollar's proven itself. Okay, a little bit of a pullback here to find, you know, some support. I hear what you're saying, not unheard of before it heads higher. I do want to point out on the daily chart, you know, we're not really overbought. We're a little bit more oversold. And when you're oversold above big technical indicators like this and off of lows of the day, right, it's a little bullish to me. That says we're consolidating up here and we're not done in this leg up yet. But I do think at some point we're gonna, you know, find a little bit of a pullback. But, you know, dollar broke down out of a range. It's trying to now break back up into that range. This kind of looks, I don't know what I just did there, but this kind of looks like we're trying to, you know, find a bottom here for the dollar, in my humble opinion, on the daily chart. So, you know, you can break that down to the smaller time frames here, and you can see this little bit of an uptrend, make a case why, you know, there may be a 10-minute chart, a 15-minute chart that wants to head a little lower, but the daily chart to me says the dollar's trying to find a low and maybe starting to trend higher.
Okay, you have a view on the sell-off into last Friday in S&Ps, whether it's corrective, has the correction played out and we're going to new highs, or is the market still vulnerable?
Yeah, weekly chart of the S&P cash here. You know, going back to basically 1932 low, real quick, just kind of flash forwarding through stuff. We saw this big
I had a rough year. I had a very rough year in 32. Go ahead, buddy.
The 70s where we had headed sideways. I like to to compare this 1970s recession and sideways price action in the S&P between 120 and 60 to the very similar 2000s between 120, you know, 1600 and 600. Then, you know, you break out. So what do we do back then? You break out, you know, here's Black Monday, here's your rally up after Black Monday, here's the booming explosion of the 1990s, which in my heart of hearts, I want to believe is where we're heading, or in the midst of, and you know, here when you line up some of those analogs, you can see how similar we are. This pullback here in April through July of 2025 is a little different. We didn't have something that steep back, you know, in the 90s, but okay, whatever. You found support right in old highs. It was a 50% pullback of this swing, and you've headed up to, you know, negative 23.6% targets. In other words, you know, 2 steps forward, 1 step back, 2 steps forward. So the question is, now that we've like satisfied a lot of upside technical targets from some of these run-ups, you've got upward sloping trend lines against the lows, and you got really a weekly chart that we just took out last week's high. I mean, that's not necessarily bearish. Yet last week's close was ugly. This week so far, you know, in holiday trade, however, right, we've been able to go and take out last week's high. If we reverse this on the S&P and you get down below last week's low, and it's an outside week lower, it looks ugly. It is holiday trade, however. So I will say this, I think between 6,500 and 6,900 in the S&P, you've got a 400-point range that it's probably going to carve out in for a bit here. I still see this in a weekly uptrend, however. On that daily chart, we'll see today and, you know, how we open. I think markets are, we're up 100 and something in the NASDAQ right now in the futures. Let's just pull up the futures now in the S&P. No sense in not looking at the short term there real quick. Yeah, and you're still through to a new high there. You've got a bit of a downward sloping trend line, which, you know, on the S&P, this market tends to like to hold on these, you know, bigger corrections. But I can go back in history and show a lot of charts like this of how it's just a correction and a stopping point before we find new all-time highs.
All right, Daniel, people that have an interest in trading futures and other markets, ags, and things that you specialize, best way
Yeah.
for them to get in touch with you.
You can find us right here at Zaner.com. If you really want to find me, go over to About Us, over to the Ag Hedge side. You can learn all about me and my team there. But Zaner and Zaner Ag Hedge, best place to find me. You can find me, of course, at Dan SOTD on Facebook, Daniel Hussey Jr. on Twitter. And thanks for having me, Dale.
Have a great holiday, my trading
You
warrior
too, everybody.
brother.
Happy Thanksgiving, everyone. And we'll be back with you next quarter.
See you next year, buddy.
Take care.
Have a great trading season into the end of the year, bro.
You too, everyone. Bye.
All right. Thank you. All right. So everyone, don't just count your bushels, count your blessings. Have a great, well, I'll probably see you Friday. Happy Turkey Day, Forex gal. And really a good time, if you haven't, to get in the chat room. I wonder what Blake's doing in USDMX here. I'll have to go check it out. Anyway, maybe I'll see you Friday. Thank you, Laura. Adios, everyone. You too, Will.